Good afternoon, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodity market update. So, beginning with gold again, gold and silver, in fact, witnessed a small rebound in this week as the US dollar is slightly ahead of the Fed meeting outcome tonight. However, US Treasury yields continue to rose in anticipation of a hawkish statement by the Fed Chair Powell, and this capped upside in the bullion side of things. Data also remained slightly negative for bullion after latest US August CPI numbers or headline inflation increased to 3.7% from 3.2%, stronger than expectation of 3.6%. Even though core inflation eased from 4.3 to 4.7 to 4.3 from 4.7%. The headline inflation suggested that the Fed could keep rates higher for a longer period of time. Looking ahead for the coming week, the initial trigger will come from tonight's Fed meeting outcome. The markets have already factored in a 99% chance that the Fed will maintain status quo on rates. In September also, market is also slowly factoring in almost 70% chance that the Fed will also keep rates steady in November. But the statement could be hawkish as the dot plots which are expected to be released this time around could suggest that the Fed may not cut rates till the second half of the in 2024. So that could be slightly hawkish for the dollar and negative or bearish for the bullion side of things. Meanwhile, ECB last week met and surprised the markets by hiking by 25 basis points to a record high, but also hinted that this latest increase could be their last due to the slowdown concerns in the zone, and this could also push the dollar if the Fed remain hawkish this time around. After the Fed, of course, investors will also be looking ahead to the Bank of England and Bank of Japan meetings. Both Bank of England is expected to, in fact, hike rates by 25 due to elevated inflation. But Bank of Japan statement will be very crucial going forward. If the Bank of Japan statement remains slightly hawkish, then it could keep the upside limited for the dollar going forward, and that could possibly lend some support to the bullion after that Bank of Japan meeting. After the meetings, US GDP along with core durables and the Fed favored PC price index will be the key triggers to watch out for in the coming week or so. So on the charts, we see the range for the MCX October contract is anywhere between 58,800 to 59,800. On the overseas side, we see the range for COMEX December between 1920 to 1985 in this week. Moving on to crude, both domestic and international crude prices continue to gain this week, supported by supply concerns. Prices also moved higher on speculation that China's economic growth numbers will boost energy demand, and this also lent some support after the Chinese central bank cut reserve ratio requirements in the previous week. US CPI number though and higher PPI numbers as well lifted oil prices as they signal that consumers are still spending, and this also boosted demand for the oil side of things last week. Looking ahead in the coming week, we see prices remaining higher, buoyed by focus of widening supply deficit in the fourth quarter after Saudi and Russia extended cuts. Also, prices can get a lift on optimism on demand recovery from the Chinese side of things. Meanwhile, inventory will play also a crucial role. Yesterday, the data showed from API that inventories dropped by another 5.3 million barrels in the last week. And if realized in the EIA numbers tonight, this will continue to keep upside strong going forward in the next week or so. On the charts, we feel NYMEX October contract can trade between 87.50 to $94. On the domestic side, we see a range of 7200 to 7800 in this week. Finally, on the base metal side of things, complex eased, most of the metals eased in this week after the moderate rise in underlying inflation in the US raised speculation that the Fed could leave interest rate steady but will remain elevated for a longer period of time. However, downside was capped after Chinese central bank cut the RRR cut on last week. The PBOC cut the reserve requirement by about 25 basis point to 10.5% from 10.75. Prices also took support after the release of stronger than expected retail sales and industrial output activity from China last week, and this buoyed the markets or limited downside, I should say, for the prices. Looking ahead, we see markets remaining range bound. The key trigger will be the Fed meeting outcome, of course. hawkish statement will pull prices lower, but a dovish statement by the Fed will push prices higher. However, the overall downside for metals can remain limited in the coming week after recent numbers from China has suggested economy stabilizing. On the data side, Chinese industrial profits and the PMI numbers next week are the key triggers for the markets on the base metal side of things. Technically, we feel on the charts, MCX copper September can trade in a broad trading band of 724 to 744. But if 724 is taken out, then we see further correction towards 715, 710 for the MCX futures going forward in the coming week. So that's it from our side. Thank you very much for watching. Have a pleasant day and a week ahead. Thank you.